up, everybody? Nate here. And our economy right now has a serious problem. And no, for once, I'm not talking about inflation and I'm not talking about supply chain issues. Today, I want to talk all about the employment crisis that we have in the United States. Businesses over the last few months have started massive layoffs. I want to talk about why all of a sudden we are reverting from this great resignation culture and this culture of getting more jobs and being at the highest that we have ever been employment-wise in the United States to all of a sudden flipping the script and going back down to unemployment that is rising like we saw in 2020. And of course, I want to break down how this is all going to affect our economy in the future and the future of jobs as we know it. But before I get into that, make sure to smash that thumbs up button below. And if you haven't already, make sure to subscribe as well and ring that notification bell too. That way YouTube shows my videos to way more people around the world and I can keep making videos just like this one. Thank you so much for doing that. And now the best way for you to understand what is happening right now with jobs and employment in the United States is to kind of understand where we have been over the last couple of years. When the pandemic first hit, millions of Americans were suddenly out of jobs. We had economic lockdown, so businesses were shutting down, at least temporarily. Of course, many of those businesses did not survive the pandemic, and that led to an unemployment crisis. Unemployment went up to around 15% in the United States, so millions of Americans were out of work. But not all Americans flat out got fired in 2020. Many of them were just furloughed or laid off, which is a big difference. This means that there's still a job there, they just can't pay you in the short term. So many Americans were in this boat, and many of them actually started to think about their employment. Unemployed Americans did the exact same thing. They started to realize, well, do I really love my job? Do I really like the pay? Do I want to continue to do this for the rest of my life? And many Americans got the answer. The answer was no. So this led to something called the Great Resignation in the United States. As things started to open back up, as stimulus ended and unemployment insurance benefited from the United States federal government started to end, well, millions of Americans quit their jobs in search of a better one. This kind of aided to our supply chain problems and inflation, but more importantly, many Americans were starting to realize that they need something better and they need a career that they love, something that doesn't feel like a job, somewhere where they feel important, somewhere where they can work from anywhere, whether it's on the beach or in their living room. Employment in the United States completely started to flip on its side. All of the power in the hiring process and in these corporations was completely on the workers. They could decide they wanted a bigger salary. They could decide their own hours and where they work and what the type of culture was in that particular business. Before, the company would decide all of that because our entire process is based on a supply and demand issue. If a lot of people want a particular job, well, then there's a lot of competition. You as an individual don't really have a lot of control or a lot of say over salary and over the conditions of that job, because if the company doesn't like you and you don't like that job, well, then they can just go on and hire somebody else. There's 50 to 100 other people lining up for that particular position. But in 2020, 2021, and now in 2022, things are a little bit different. Workers have all of the power. There's not as many people applying to particular jobs, so they basically have the say over everything that goes down, and businesses have to follow suit. We have already started to see a lot of changes from corporations, although I will say this has been extremely slow for many businesses, and that's why we're still seeing a lot of jobs available, but a lot of Americans who are not willing to fill them at this point. So like I said, a lot of jobs have started to change, but now things are starting to flip a little bit more into the company and corporation and business side once again. They are starting to get a whole lot more control because Americans are suffering from a lot right now. They're suffering from prices going up because of inflation and of course supply chain issues, and wages basically stagnated all throughout the country. That all happened back in 2020 and in 2021, but something else major happened over the last 2 years that has completely flipped employment on its side and is now starting to change again in 2022. During this time, we had a lot of supply chain issues. We still have them today, but they were really bad back in 2020 and in 2021 because Americans weren't weren't working, and other countries and economies throughout the world were also closed down. Our supply chains got clogged and resources started to get used up really quickly, which meant that inflation in those particular industries went up too, like toilet paper, and of course microchips for our computers and our vehicles. All of this was going on, so businesses had to get really creative during the pandemic. As things started to open back up and demand got really high in the United States, businesses needed to hire a whole lot more workers. But we were going through the Great Resignation, so as those businesses hired a lot of workers, workers didn't want to get paid what they did in 2020. They now wanted to get paid because inflation was so high. So businesses were giving out raises to just about everyone that was applying, and of course their own workforce. They were giving out bonuses, they were giving out raises, and now people were making all of this money. That kind of only hurt inflation more because now the Federal Reserve needed to print more money, and of course businesses were giving out more money, so people had more money to spend. As inflation has gone up though, people have not had as much money to spend in 2022. But this problem is really unique because there was so much money circulating throughout our economy over the last 2 years. We had extended unemployment benefits. We also had stimulus. We also had money coming directly from the Federal Reserve to Wall Street. All of this created trillions and trillions of dollars. In fact, we went from around having $3 trillion in circulation in early 2020 to now well over 20 trillion. So around 80% of all of the money in circulation today was printed over the last 2 or 2.5 years. That is more money printing than we have seen in a very long time. But to kind of add insult to injury, the Federal Reserve also dropped its benchmark interest rates to nearly 0%. So that meant businesses and new businesses could take on all of this debt very easily because it was so easy to borrow money. That meant that there was even more money starting to circulate throughout our economy. So in 2020 and in 2021, businesses had no problem hiring additional people and then paying them a crazy salary because there was so much money. All of these companies that were trading on the New York Stock Exchange were gaining hundreds of billions of dollars in value simply because investors were pouring their money in. Interest rates were low, stimulus was high, money was everywhere, so investors were making investments. They got a little greedy though, and they got a little risky because a lot of the things that they were investing in didn't really have a profitable plan, didn't really have good fundamentals. A lot of the tech giants that we saw launch as an IPO in 2021 were saying outright that they don't plan to make a profit for a very long time. Investors still poured money into them because they were interested to see what they could do in the future, and they figured all of this free money is going to stick around for a very long time. That created an abundance of workers, a workforce that is now employed throughout the United States. Our unemployment level in the United States is around 3.6%, the lowest it has been since around the 1960s in the US. And this kind of benefited our economy in a lot of different ways because, like I said, we had supply chain issues. Businesses had to get creative. They had to start opening more factories. They had to start producing more supply because demand was so high. They had to hire more people, and the only way to bring those people on was to start paying them a lot more because workers had the complete flip happen and they saw the control in the hiring process. Well, businesses didn't have a choice but to offer them everything that they wanted. But now in 2022, things are completely starting to flip. We have really high inflation. The Federal Reserve is starting to raise its interest rates again, and those supply chain issues are only getting worse. Now, overall, this is really bad for businesses, and we are only getting started with the layoffs and firings all throughout the United States. Because interest rates are going up, all of those businesses, all of those companies that have taken on a lot of debt in order to grow, well, they are hurting right now. They don't make enough in profits or in sales in order to support themselves. And the only way that they get money is through investor interest. But because interest rates are going up and inflation is so high, investors just don't have as much money to invest like they did in 2021. A lot of those tech IPOs and other businesses in general are starting to fail, and they're laying off thousands upon thousands of workers. They don't have that extra money in order to support the salaries that they created in 2021. That is a serious problem, and it's going to be a problem for every every single business in our economy. So that debt is getting a whole lot more expensive. But not only that, we have a lot of the stimulus starting to end too, so businesses just don't have as much capital to reinvest into other businesses as well. What you're running into right now is businesses that are putting out really bad earnings reports on the New York Stock Exchange. So an earnings report is basically how much the company made in a particular quarter. They're going to show you everything from their profits to their revenue to, of course, all of the money that they lost. Companies are losing a lot of money because of supply chain issues, because of the pandemic, and of course they have to pay people a lot more, but they're not making enough in sales because regular everyday Americans are not buying their products. And that has everything to do with inflation, because we had so much money circulating in our economy in 2020 and in 2021, and so much money was created without actually making any new value. Well, then now you have a situation where inflation is at an over 40-year high of around 8.6%. That means something today that costs $1, year from now might cost around $1.07 or 8 cents, which isn't really a lot, but considering if everything goes up at that rate, you're now spending 10 cents to 20 to 30 and 50 cents on an individual product every 5 or 6 years or so, and wages aren't going to go up that fast, so your money is bleeding. You're getting so much sucked out of your paychecks every single week, and Americans have to prioritize what they're buying. And unfortunately, when it comes to that money printing, there's nothing we really can do because all of that money has already been created in our society and it's already out there, so people are spending it. Businesses are holding on to it. So what you have now is a Federal Reserve that is trying to eliminate the demand, which is basically all they can do. By raising interest rates and eliminating all of that stimulus, there just isn't as much opportunity for people to go out and spend, so demand naturally comes down. We live in a supply and demand culture, so as demand comes down, businesses are not going to keep up with supply, and that includes workers. We can most likely expect unemployment to go up in the United States, and actually the Federal Reserve is kind of happy about this. They have been talking about for months that they want businesses to go on a hiring freeze. They don't want businesses to hire new people and then have to fire them later on down the year. So they want businesses to completely pause all of their hiring, and that means that new salaries won't be being created, especially really highly inflated ones, so people aren't making as much as they did over the last couple of years. With businesses pausing their hiring and then firing a bunch of people in order to keep their business afloat, well, now you have a situation where unemployment starts to go up in the United States. Some estimates believe that unemployment could be at around 4 to 5% in the US by the end of 2023. That also means that people have a lot less money to spend as well, so inflation starts to come down. So with all of that being said, what exactly does this all mean for the future of our economy and the jobs market? Well, the United States jobs market is going to be pretty barren for a long time because businesses, whether they're public, private, or a huge massive corporation, are just simply not going to have enough money to continue to hire a whole bunch of workers. They have to worry about staying afloat right now because they're not getting any investor liquidity, they're not getting any debt. So without any of those two things, they are solely relying on consumer spending in order to grow their business. That is not a reliable way to make money, because what if consumers stop spending? What if your product goes out of style? What if your service is no longer valuable in the United States? You suddenly make a whole lot less money and your entire business model crumbles before you. Businesses are simply going to have to forego hiring people. They're only going to be able to hold on to the people that they have, which means the people that are currently working are about to lose a lot of that culture and a lot of that work-life balance that they gained during the Great Resignation. These companies are going to shrink their workforce, but those jobs still need to get done, and they're going to rely on one person to do the job of around 3 to 5 people. That is extremely unfortunate, and it's going to mean that people really get a headache from their work. That could also increase firings because everyday average Americans are not going to care about these major corporations. They're going to care about their paycheck and their work-life balance, and if they're not getting either, they're still going to quit their job, even if the job market isn't going to rehire them at another company. So this is a huge problem in general, and the argument from the Federal Reserve is, well, if less people have jobs, then they can't spend as much money because they're not making as much. But the problem that we're running into right now is our big supply chain issues, and of course the war between Russia and Ukraine. As we're having a hard time getting those resources to make products, well, the inflation in those industries is going up. That's why businesses wanted to hire people in the first place and why they started to hire more people than they ever have before. But with people getting fired because businesses can't keep them on, then businesses are not going to be able to produce as many products, meaning that we have a lack of supply, but demand is still staying pretty steady. It might end up dropping, but supply is also going to drop. So it's basically the same level of dropping on both sides, and you're going to have prices continuing to go up because of that, making inflation get even worse. This is all a big, delicate balance between the Federal Reserve, money, and our businesses, and what people are willing to buy and what people are willing to spend their money on in 2022. Everything is basically being reset in our economy, and that includes the jobs market. You're probably not going to see a lot of people gaining a ton of jobs like they did in 2021. You're not going to see the job market red hot in 2022 or beyond. Businesses now have to be very careful, and all of this ultimately ends when you have supply and demand very close to an equilibrium. As people lose their jobs, as the price of things gets way too expensive, the people who are employed simply are not going to buy those products. All this means is that businesses are going to go under. We're going to see a lot of companies eventually disappear, and even more jobs are going to be eliminated. But as that happens, less money will be spent. As the Fed raises their interest rates, less money will be spent. So demand will basically be zero, and this gives supply of everything to start coming back up. And then once you have an overabundance of supply, then prices can come back down and people can start spending. As they start to spend more, businesses will see a bigger need to hire more people, and they'll have the money to do it because people are starting to buy things again. The Fed will most likely drop its interest rates all at that point, but this is not anywhere to be seen in 2022. We are still very far off of anything like that happening. So don't expect it to happen by the end of this year, maybe in 2023 and maybe in 2024, but this entire resetting process is going to take a very long time while the Federal Reserve battles inflation. Until inflation comes down to around 1 to 3% in the United States, you can pretty much expect all of these problems to continue. And it's all basically resetting everything into the new normal like we saw pre-pandemic back in 2019. But now I want to hear from you on this issue. What do you think about the Great Resignation and our labor problems in the United States? Do you think we're about to have massive unemployment like we saw in 2020? Or do you think the jobs market is actually going to level itself out and we're going to have an equilibrium of supply and demand sometime soon? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.